Good evening and welcome to a special episode of Poor vs. Standard. This is Poor, and tonight I just want to get into a quick little update as to what happened with the short squeeze positions and basic market things that happened today being Tuesday, June 8th. As always, not a financial advisor. Any advice or opinions within this podcast and YouTube video are considered for entertainment purposes only. Don't sue us. Don't do it. So today, if you're looking at the YouTube video, you can see the screen up with our portfolio. Shot up over $4,337. CLOV was $4,200 of that because we own 220 shares as well as a couple calls. This is actually kind of making up for those calls that I had bought 2 weeks ago that expired worthless. So I just wanted to discuss how these, if you've listened to the recent episodes, and we discussed short squeezing and things of that nature and the difference between a gamma squeeze, a short squeeze, and that sort of thing. What we didn't discuss is the difference between CLOV and AMC and GameStop. Before all this happened, GameStop was not doing well. People were buying online, even consoles like the PlayStation 5 are going to more digital platforms where you can just buy things right on the PlayStation Store and never have to step foot into a GameStop to buy the game. AMC, all movie theaters, movie visitors have been down for the last decade. Decline. You can look it up. I'm not trying to harsh the buzz on AMC. I'm not trying to harsh the buzz on GameStop. They both have the ability to reinvent themselves now because of this, which is excellent. They can make it an experience. Right now, AMC could totally renovate their theaters, make it an experience, a dinner and a movie kind of thing, where they put in digital things. You order right from a screen on your seat and have dinner brought to you. So it's like a restaurant with a movie. And I would love for that because that is such a fun time. I've been to one of those, something similar to that down in like the Washington DC area. It's fantastic. They serve you beers in the movie. It's great. And GameStop has the ability to basically reinvent itself as well. I'm not in charge of the company, but if I just found this newfound wealth and had essentially a dying store that sold, Funkos, game accessories, and games, and I knew that Amazon was taking over online stores and things, you need to make it an experience for people to come. Like Toys R Us should have. Like, you could have had aisles upon aisles in Toys R Us dedicated to having kids come in, play with the slime, or do little, like, the Power Wheels racetrack or something, and just that kind of thing. You could do the same thing for GameStop. You could have a bunch of the systems out for people to play with. Have them, like, drop their kids off at the store while they go shopping, that kind of thing. I don't know. It's again, not my company. I don't know what they're looking to achieve. But they couldn't have done this before because they didn't have the capital. As investors, as retail investors, we have given them the ability to change their outcome. CLOV, on the other hand. CLOV is different. CLOV is a company that was improving. It was gaining. It had more clients. I believe it doubled its clientele over one quarter. It doubled its clients this year. Yet the price kept going down. Shorts got greedy. The shorts shorted CLOV to a 50% area. 50% of the float shorted. Meet Kevin showed this when he did the short checks that he does. A 50% short on CLOV. because they kept pounding it down. But the difference between this company and the AMCs and the GameStops is this company actually had value, had merit that those ones didn't have. Those ones were in dying industries and now have a second chance at life. CLOV was a spec that was a well thought out, and I mean, Chamath, like him or hate him, he knows deals. And there's been a lot of bad press about Chamath, a lot about specs. And if you don't think that that's kind of organized and oriented to try and get people away from these because banks are missing their IPO money, and if you don't think it's geared to try and get retail investors to hate specs and hate people who put specs up, I don't know what to tell you. So they tried to make all these specs look like they were losing value in the worst kind of way, and CLOV was targeted most of all. And they got super greedy. And just like last week when AMC had 100% day, today CLOV had 100% day. 99.58 after markets closed at 8 p.m. with the after hours. CLOV is currently at 23.79. Almost exactly 100% up. Insane. And I think there's room to go because this is going to be unwinding for weeks, if not months. They put so much into the short position on this stock that you can't unwind it in a week. There is going to have to be a plethora of ups and downs on this stock. I mean, look at GameStop. It was shorted, 140% was what we were told, and then it got corrected like 35%. And then AMC, we were told, was shorted between 17 and 21% when it was down at the $6 range. And it's shot up dramatically with just what's been reported as 21% short. CLOV with a 50% short interest on the float has gone up 100% in a day. I mean, it's gone up roughly, from $8, we're talking 400%? 300%, excuse me. From 8 to almost 24. So, it's just starting. And there are some things that you need to look into if you're going to invest in these sorts of companies. These are highly volatile. These are highly risky. And not all companies are the same. Market valuations differ immensely. The number of shares available, vastly different. And you need to know these things to understand how things are going to play out with the squeeze. You also need to understand how much institution money there is versus how much retail money there is. AMC is 80% retail money. CLOV, not nearly 80% retail money. This could be good, this could be bad. The institutions could decide to hold, like they did with the, the Volkswagen incident that happened about a decade ago. Or one of them could decide to sell a massive position and free up liquidity, and the short squeeze could be done. High risk, high reward. That's what these kinds of plays are. And there's others, there's a lot, and honestly, I can kind of see this like a chessboard right now. The institutions are losing their shit. They're losing because they're trying to put out one fire over here, and another fire pops up over here. It's like, oh, okay, the retail investors let us take this pawn, but they just took our bishop. Because you've got Workhorse popping, you've got so many other stocks that were heavily shorted starting to jump up. You've got a bunch of stocks starting to jump up, and all these people who shorted these stocks are starting to freak out, and you're going to see some serious shit in the next couple weeks. I almost guarantee that. I mean, even today, if you looked for the Hindenburg Research website, It wasn't there. They're being sued. Can't find out why yet, but I'm pretty sure their lawyer told them to take down their website. Because here's the thing about when you go after companies, you need to back it up. Because if you start printing things for the world to see and it's not true, that's libel. So if you start printing things that aren't true about, let's say, CLOV, and CLOV decides, well, you're doing us dirty to try and keep our price down, so we're going to sue you. That's a libel suit right there. And the proof is all over the internet. Screenshots have been taken. Yeah, you're going to lose that one real quick. So if you decide you're going to try and defame a company, make sure you have the receipts. Now, Hindenburg did with Nikola when they said, that's just a truck rolling downhill with no engine. But that's like one out of the, I don't even know, several hundred times that Hindenburg has tried to badmouth a company that they were actually right. It's like, even a broke clock's right twice a day. So, I don't know. I've read a lot of Hindenburg's reports, and a lot of them are just like saying things that are, yes, they're true, but they're trying to pin them in a bad light, but they're not necessarily bad things. It's dirty at best. So, I don't know. It's just my thought. So, you have to be careful, and you're going to read and see a lot of different news stories that are going to tell you, oh, the short squeeze is over, or you could see things on Reddit saying, oh, it's over and things like that. And I saw a post where this bot, literally posted with one account, and then it was supposed to post an agreement with the account that just posted, but it didn't change its username because it had a glitch or something. So it's literally trying to have a conversation with itself, and you can see that it is in fact a conversation with itself. And it's trying to badmouth the GameStop movement, the AMC movement, that kind of thing. And I don't want you folks to take this as like, I don't believe in the AMC and the GameStop. I believe that all of these are working in tandem to freak out the hedge funds immensely, because they're like, okay, we're putting out the GameStop fire. Okay. Oh shit, AMC's popping off. Oh shit. Okay, we're working on putting out the AMC. Oh shit, CLOV is popping off. Okay. CLOV's going down. Hopefully. Okay. Oh shit, Workhorse is going up. Okay. Workhorse is, no. They're losing the fight, and it's starting to come unglued for them. And it's working. And they're trying to fight at multiple fronts, and like any good general will tell you, it's really hard to win a two-front war, let alone a multi-front war like that. So, well done. It's not over. And as always, do be careful when you're investing. So, thank you for listening. Good luck. Stay safe. Good night.